Hello, this is Cryptolyze. I hope you are well. This Thursday, January 4, 2024, we meet today to talk about TIA, CELESTIA's crypto. So as usual, we're going to dissect this video into two parts. A fundamental part where we will come back to what CELESTIA is, the role in the blockchain, since it is a very specific role, and then we will go into the technical part to be able to project ourselves in the short, medium, long term on purchase price, sale prices, and it begins right away. CELESTIA is CELESTIA's crypto. CELESTIA is a blockchain which is built on the Cosmos SDK, therefore, which is built on the real development title of Cosmos. And CELESTIA is a project, I have already spoken to you about it several times in 2022, which aims to offer a modular solution to the blockchain. The principle being the following: it is, if I develop a blockchain project, I am obliged to do everything in this blockchain. I am obliged to create consensus. Therefore, validation, verifying that the transactions are good, storing the data, verifying that the data is accessible so that I can continue to validate the transactions, and everything else. And obviously it takes a lot of time and above all a lot of infrastructure. This implies that I must have the ability to do each of the bricks well. And obviously it requires a lot of money, a lot of validation nodes, and ideally, if we want good decentralization, a certain number of operators to be able to manage these nodes. And it's not necessarily always very simple. And precisely, the goal of CELESTIA is to provide a layer in which we will have a block which will be separated, which will be the notion of data layer. What does it mean? This means that we have the possibility of just being able to store data, check their accessibility on CELESTIA while using another blockchain. So it goes a little bit further than that. We even go to other parts like a consensus. That's, i.e., I can just use the CELESTIA consensus to do validations, or I can store data on CELESTIA. And the goal is to be able to greatly reduce costs. As you can see, at present, Layer 2 on Ethereum is relatively expensive. Here in their example, we're talking about Polygon Layer 2. We're talking about the OP stack. We're talking about Arbitrum. We're talking about Starknet. We're talking about all these Layer 2s which are being built and which use the security of Ethereum. This is very good, but we still have transaction fees which are relatively high. The goal is to reduce these transaction costs. We are going to have a new update on Ethereum that will arrive, which will impact blobs, which are the name for the structuring of the type of data that we store when we do a roll P. So we will structure it in the form of a blob, and we will store it on Ethereum. And that has a cost, because we do not have to store all the data on a blockchain, or in any case on the parent blockchain. We can store that elsewhere, and that's precisely CELESTIA's interest. This is because CELESTIA has storage costs that are tiny compared to Ethereum. So we would store on Ethereum only the proof of validation of the transactions, and the details of the transactions would be stored on CELESTIA. Here is a concrete example which would make it possible to easily divide the transaction fees on OpStack, for example, or Polygon, by 10 or even 15 or even, why not, 100. Really just ridiculous transaction fees. And that's the very principle that we don't have to ask ourselves the question of how I manage the notion of data. And it's important because when we start to hyper-use the blockchain, that means we're going to need a lot of data, and especially to have rapid access to this data. And this is also the principle of CELESTIA. It is not just cheap storage to store data. On-chain is really about being able to provide accessibility and structuring of this data, no matter what project we are doing. And that is precisely the goal of CELESTIA. And this is really very important. And it allows us to be able to structure a blockchain ecosystem that is totally modular and much freer than it is currently. So to give you an example, when we are on their site, they explain to us that you choose your framework in which you want to work. For example, I want to use OpStack, and then I will see what that I do, such as, for example, I use consensus, or I pay directly for blob spaces in which I will store data. Next to it, we still have their blob stream and the Node API, which is rather very well done, which really allows for very clean development. And we go even further because they have integrated rollups as a service which are integrated directly into the CELESTIA ecosystem, which means that I use CELESTIA for something particular. I can call a rollup as a service like, for example, OpStack or Polygon CDK, which will be called in not too long. In any case, it is not yet finished, but which will allow me to be able to directly deploy and use validation functions very simply. And this is CELESTIA's goal. It is to be something that will position itself between all the different blockchains. So to be even more explicit, here is a monolithic blockchain, for example Solana or Ethereum. It is execution, settlement, and data layer, which are directly in the consensus layer. The goal of CELESTIA is to separate execution, settlement, and precisely the notion of data, and make each of the bricks available and choose. If I really focus on the execution layer, I can easily go to Solana for settlement and data availability. So it really gives a lot more flexibility for developers. Clearly, as a user, you are not going to feel the difference, perhaps in terms of fees. And again, I think that with the various updates that we will have soon, we will have a big reduction. Fees. And in the long term, we will no longer even see the structural difference in fees. It's just a question of simplicity, of rapid deployment of products around the blockchain, and precisely CELESTIA is a very good solution of this style. So there's another one that I've had in mind for a while, which is the one from Polygon called Avail, which I really follow. And I think that it too, when it comes out, that is going to be really impressive. But in any case, CELESTIA is a very nice product. So at the level of the token, the TIA, the role in it, it's quite a few things. It's one, the governance, necessarily logical. The transactions, the fact of paying for the use of these different layers and these different modular bricks. And behind that, we will still have a lot of inflation. We have flat inflation, which is, if I'm not talking nonsense, yes, that's it. 8 the first year, and then it will decrease by 10 each year to arrive at 1.5 annually. Okay? So it will be a token that will be inflationary, which is rather classic. We have a release of 2 lock 50,000 tokens which were carried out during the TGE, excluding inflation, add 8 of systematic inflation. We do not see them, but they are very present. We have 8 of inflation which are recovered if ever you stack your tokens. Be careful, it's the same principle as the Atom ecosystem. So we actually have this limit obligation to actually stack third parties to precisely mitigate this inflation. And above all, the big date to remember is in 300 days, we have $2 billion to be precise. It is 175 million TIA, which will be released. Depending on the price of the TIA at that time, it will be very badly. We can clearly see the big jump. So there we risk having a big profit taking. So we will have to be very careful about the dump that we could have on this part. Everything will depend on the price of the TIA at the time when there will be this dump in relation to the perspectives that we are going to pose. So we still have a diluted market cap, which is at 13 billion. Which is relatively substantial, but which overall is also relatively weak. We recall that it is a diluted market cap, so that implies that we have a pricing which is rather consistent in relation to the general dilution that we could have at the level of the token. Hence the interest in always looking for a diluted market cap for our research and our understanding of the project, and we will project ourselves into the technical part. So you will see it will be quite simple because there is quite little information for the moment. It is a token which is very new. There have not been any big massive dumps because precisely the people directly locked their TIA to recover the 8 for the year, because the next dump is in 300 days. And given that we have the date of the release, which is likely to be significant, I think that before the release, we will potentially have a shortcut to make because we will have a preventive dump of people who will be stacked, who will be destacked, who will recover part of the profit, and then buy back a little lower. In any case, it's a strategy that I will have. In terms of evolution, there are 2 big recharge zones to take into consideration. As it stands, which is this area here in 8 and the area much further down around 4. If we ever return to these zones, for me they are obligatory buying zones, because we are in all cases below 0.5, including an interesting part to buy according to the Dow theory, and basically we have imbalances that are waiting to be validated and recovered. So for me, we are really in areas that are interesting to buy. In terms of evolution, what evolution can we have? Classically, price discovery. So we do a Fibonacci with extensions that start again, with a 1,618, 2,618, 1,618, with a TIA of around $23, $38 for the next one, and then if really we go higher, it's above $50. So imagine $50. This implies that we are on a diluted market cap of around 65 billion, which remains relatively substantial for a blockchain which remains only modular, which is not a blockchain in which we will have an image and in any case a spotlight which will really be carried out on it. So we take a little step back from that. But in any case, it is a technology which is really very strong. Everything depends on the integration of this technology into all the other blockchains which will arrive on the market during the next bull run. Finally, during the bull run which is being prepared there. And therefore, obviously, it will depend of these performances to see if CELESTIA will succeed at this moment and also what the position of its competitors will be when the market takes off and what is the added value of CELESTIA compared to its competitors at this time, moment to moment. And it's going to be really, really interesting. In any case, the value it currently has is that it is the first to offer this, to be launched, to have partnerships, and to develop an ecosystem around its own blockchain. And that already has a really strong value. If you don't know how to manage buying periods, selling periods, or even just a bull run, whether in the psychological part, in the zone or risk definition part, don't forget that has a free 30 pages guide, concise, effective, available, free of charge, I remind you, in description and comments. And we'll see you tomorrow for the daily. If you want to train and really enjoy bull running, it's simple. There is perfect, complete, free training available. It's through an educational journey that teaches you everything about blockchain, crypto, investment, technical analysis, and trading. All this for free in comments and descriptions. You have exercises, multiple choice questions, modules, videos, guides, everything to support you in your progress.